Materion mentioned. Wolfie, I know looking in that area, I've heard you talk about it. Is would
Yeah,
we
we've been long it for months. Yeah, we've been long it since sub 100. My calls are up like 480% on it. But yeah, I love that name still. We're
what
still
does
in it.
Materion do again?
They're the only integrated producer of beryllium in the entire Western Hemisphere.
Beryllium.
Um,
What does beryllium go into?
it's another one of those stocks
Magnets?
where
I'm seeing a lot of
no
Oh
one
wait.
talks about it.
Cobalt,
Beryllium's used for everything: aerospace
cobalt,
and
and nickel as well.
defense, spatial. Yeah, but beryllium's their real choke point, and beryllium's
Yeah.
where they have all the control. If you look at their high purity beryllium contract from the Department of Defense from 4 years ago, that contract went overlooked. It's actually coming up for renewal mid next year, and it will likely get renewed. It's going to be a $300 or $400 million contract. That stock trades cheap too. Still, even after this 40% move higher from where we bought it, it's still cheap, and the chart still looks great. You know, Materion, Huntington. I mean, these names all look great. And the cool thing with Materion is you get cross industry exposure with it. You get aerospace and defense exposure with it. You get rare metals exposure with it, the beryllium, and you also get exposure to the nuclear industry through it, where beryllium is a critical applicant material. So Materion's fantastic. Yeah.
Wolfie, what do you like about Materion, or what's at least interesting for you when you're looking at it?
No,
Probably the
he said
chart.
it. He said it, but also, no, I really think that nickel and cobalt, like some of these nickel cobalt names, and there aren't very many of them that are domestic that are going to probably get a bump here in the next couple of weeks, months, as we start to take that stuff seriously as well. Like that's how it is. It's like when they put the investment on for MP, then it opens the floodgates for what are the other things that are, similar, or what are the other things that where could they go next, like that kind of thing. And I think that's one of those names. That's why I brought it up. That's one of those names where it's domestic. He mentioned the beryllium side. There's a nickel cobalt component. It's a battery play. It's an industrial play. It's like all sorts of things. Another one like that you'll like, just from a technical perspective, that kind of flashed today is Honeywell. Honeywell off the 200 week.
Too big
Looks
of a
interesting.
market cap for me, but I know
Well, no,
Evan loves
I'm
that.
talking about Evan. Yeah, I'm talking
Oh
about
yeah,
Evan.
Evan loves it. Yeah,
Yeah,
yeah.
yeah.
I've been waiting. Listen, it's been downgraded to liked, but it's still very firmly in the portfolio.
No, it's a from a setup perspective, long against last week's lows, pretty straightforward. It's about $10 risk, solid.
You
But
know
that's
what
kind of
I will
like,
say? For the
go ahead.
first time, I have sat on these Wolf trading spaces during the days for a lot of times. I don't think I've ever heard anyone trade Honeywell with me. I've only heard people make fun of me for it, like Stock Talk does. And I'm down. I'm down a little bit. But this morning,
Honeywell's a
people were
great
trading
company.
it.
I just Honeywell's a great company. I just think a little too diversified, but that's just my
And
opinion.
listen, they're doing a spinoff. That's why I'm in it. Let's get rid of some of that diversification. Get some
It'll
units
be a
that can
better
actually
stock
do
after
pretty
that.
well.
Be a
Yeah,
much better stock
maybe
after
I'm
that.
early. Maybe I'll just
Yeah.
buy some more. But Wolfie,
What's the
what's
spin off again? What's the break they're doing?
let me get it
Like,
back in front of me.
I mean, it's probably gonna be one or the other component that's gonna be the better
Right.
performing component. But
Sorry, I walked away to
For
grab a
Honeywell?
Coke. It's
Yeah,
it's
Arrow.
automation, aerospace, and materials.
yeah, the aerospace
Yeah,
division.
they have lots. They have control systems. They have a lot of different aerospace parts that they're almost exclusive in. They are a big supplier of engines to business jets. They also have a company which has been doing a lot of research into quantum compute for better part of a
Monative.
decade.
Rate it 1 out of 10. I will not hold you to this. It's below my cost basis right now. You Honeywell guy, long term?
No, but there is a point I will buy it. It's not
No,
too
but
expensive, but I'm
is this
not.
point like 100, or are we talking like a 160, 170, wherever it is?
I don't know. I don't know how to put it there.
All right. Bought a share for the culture. We can continue. Sorry. You sparked a good
So for
one,
my
Wolfie.
problem has always been, they have large enough of a diverse holding that when I was doing a lot of research into big defense. they were not big enough for me, and they had diluted away some of their advantages there into other sectors, which I was not interested in. So, I never paid that much attention, but they are cheap. They are going to make, almost $11 this year, and probably the next 12 months is going to be $12, $13, right? It's if you think about, if they really make $12, $13, you're talking 15p, which is what, close to half of what, 50% less than S&P PE. So it is cheap as chips. Think about it that way. 2.5. If you're sitting in a big position there, you can trade around that. I'm pretty sure it has weekly options, so you can generate money from selling options weekly. There's a lot going for Honeywell. But if they were a pure aerospace company, I would have invested heavily into it, at the time when I was doing that. But they were not, and that's why I lost my interest.
I appreciate the thoughts there. Wolfie, we kind of got away. What was the technical setup on this one? What's happening?
200 a week. Held the 200 week.
200 week. Whoa. It
Yeah.
was stock talk. I've heard 200 a lot. Was it week or month or what were you talking about there? 200 week seems like what
On
I've trained.
what?
Honeywell
I don't know. I haven't
is
looked at that
approaching its
chart.
200 week.
Well, it's just 200 week in general.
Sounds kind of hot.
Yeah, 200 week is, yeah, it's a pretty reliable buy spot. 50 month and 200 week are the most reliable buy spot across all asset classes. That's just data. That's not my opinion.
Okay. All right. I'll buy another share for the culture. I like it.
I'm not telling you to buy it or not buy it.
No,
That's
no one is. I am. I want to be in this one. And
So outside of that, it's okay. So you got a 200 a week, $200 round level support, gap fill from the April gap up, and a volume shelf. All of them held at the same point. So you have basically four levels of confluence, basically holding the support at the same place. And it's not a coincidence that when the stock did rip, like today, it had like an outsized move to the upside. Usually you get situations where a stock will bounce and you get a little bit of a bounce. This one, it's not, I don't think it's a coincidence that you had a stock that, basically reclaimed the two big sell off days in one tick once it held all those things at once.
yeah, this is one that my play here is this company is splitting up into smaller pieces. I think that there's a lot more under the hood. The value is going to be able to be unlocked with more specific units, but that is happening into the second part of next year. So I'm definitely early on this one and probably just locking up capital here. But I don't know. Maybe it's interesting and you want to. I personally like the idea of accumulating at very large levels like this. So yeah, that's interesting. I'm glad we brought it up. I'm glad we got 4 minutes until the
They
close.
also just quickly, they also settled a lawsuit that would have been very expensive with Bombardier. So that was the overhang that was removed. So that was a big deal. So that was very recent, I think 3, 4 weeks ago.
All right, someone tell me something bad before I just go in and buy another share for the culture. Give me. No, I'm kidding. We're good. Let's move. We shouldn't have too many earnings coming up after the close at all. I don't think there's too many known events. We are in the morning earnings. We're in the morning earnings part of the season right now. ASML, Bank of America, Morgan Stanley reporting tomorrow. We had JP Morgan, BlackRock, Citi, Goldman, all of them reporting. I did a little summary of the earnings for the morning, and I did not use one red emoji for a company that missed earnings. Everything was green. Now, look at all the stock moves, and I'm pretty sure all of them were red. JP Morgan was down like 4 or 5%, which for that company is quite a large move. It clawed it
Actually,
back to
all
down
actually
two.
all they came running back. Wells Fargo was up 8% at one point today.
Damn, really? All right, there you go. My whole thing is that would be an interesting start to the earnings season. Yeah, Wells Fargo looks good. We're in a world where JP Morgan is down four, Wells Fargo's up six. I know JP Morgan's down two, but I just
JP Morgan, yeah, it came
sometimes
back.
you just need a good
They
exaggeration to make a point. Monative, I know you like to pull out your stats of like how the earnings seasons go, and it's way too early. But I could tell you we're at like 80% beat or something just on the quick ones that I've seen.
Yeah, KRE and KBE are the strongest ETFs today. Both up 3%. So
They
very
are,
solid.
Yeah, yeah. Just to add on to what Frank
yeah,
said,
wow.
20%, 20% of S&P earnings come from banks, and 70% of that earnings comes from the first couple of weeks of banks reporting. So within by the end of, let's say, by the end of next Friday, we should probably have 15% of S&P's profit already reported. This is just in banks. You have the rest also, right? You have, and unfortunately, TSM, ASML are not part of S&P, but you have a bunch of others, right? Large healthcare companies reporting. So effectively 25%, 25% or close to 20% of the profits of S&P are already in by the end of the next week, right? And then it speeds up even more when we get through the Mag 7s, right? So which is why the entire S&P 500 earnings outlook is front end weighted in the first 5 to 6 weeks of earnings. Pretty much once you get past that point, you know exactly what S&P earnings are going to be. You can extrapolate with a very high degree of certainty. The rest of the time is just individual stories. The index story is done after the first 6 weeks, and we have a good start. So did I lose everyone? Do I have to bounce out again?
No, you didn't lose
No,
everyone.
you're good. Probably an Evan problem. I'm sitting here. We're about to
Yeah, no,
close.
I just took a quick bail because I wasn't able to pin anything up in the desk, so I thought I'd hit a quick reset.
I'm just
Yeah,
staring
we
at
are
this
about to
21
close.
EMA stick save right here.
Yeah, it held the 11 o'clock support level.
What was like market on close? I haven't even
It was
I never really
tiny.
looked at it that much,
It was
but I've
probably
seen it
mixed. It was
less.
probably slightly to buy from what way they're looking. I'm looking at them here.
It was I just had it in front of me. It was a sell side, but it was small, like in like 143 million
Tiny.
sell
We only
side.
like big market on close.
Yeah, if there's not
Logical, I
a
hope you're
billion
here.
on there,
Stick with
don't care.
us. I think I found myself in one of these binary little biotech things, and I'm probably gonna sell it out before, but one of my trade things signaled, and I was like, you know what? We're probably still in a bull market.
Let's
Let's
hear
sit
it.
on it.
What is it?
Oh, I don't want to get too deep into it right now, but Nectar.
What do you mean, dude? It's my second largest position. I've been
Really?
in it since $22 though.
There we
Well,
go.
actually, I've been in it since $13 actually, but trading around it a lot. What do you mean what did it trigger for you?
So, okay, we are working with them, but I've actually been really trying to use it, and there's been one thing that's been really successful for me on Prospero. It's these net option sentiment and the price, and when the score gets away from it, there's a little chart on there. And basically, I've seen it do this like 20 different times for different stocks, and it tends to work. So basically, net option sentiment is really high, betting that the price is going to go up, and the price hasn't really moved that way necessarily
I
yet.
don't know how to tell this to you, but I actually know most of the people that I know the people who own most of those options. So I don't know. I know them pretty well. Their
Well, they're
logic
all
and
betting
reasoning
on
makes
it
sense.
going up. So my plan was partially to get out of this before this binary decision it has coming up. Because I mean, listen,
I have a
I'm
question
not
for
in
you,
this
Evan.
game like
Do you
you.
Evan, do you know what binary decision is coming up?
Yeah, there's a thing with Eli Lilly. I couldn't tell you too deep about it,
Okay, I
but
just
I
want
could
to make
tell you
sure
that
that you
there
know.
is an Eli Lilly lawsuit that the
Yes.
decision would be coming up. My guess
Yes.
is stuff kind of might come out a day or two before. If it comes out before, it's probably been
Up,
Dude,
dude, Uncrustables are it's like
I don't know. Just make
elite
a peanut butter
athlete
and
food, dude.
jelly
You know
sandwich.
the
What are we
NFL
talking
buys
about?
$30 million of Uncrustables every year. You know that?
I know. I see all those videos, and there's always Uncrustables, but I mean, just make a sandwich.
I mean, a relative valuation basis. That's how we define them, right? And I'm saying that correlation is getting harder to make. It's getting harder to correlate the S&P 500 PE, average PE, with historic PEs because the conditions of markets were different to inform those PEs. If a high PE, if a high market PE in 1980 was whatever 30p. Okay, if that's considered really rich and gross, I'm just spitballing numbers. I'm not saying what it actually was. Then
Yeah,
if
I get you
yeah,
because we have higher margins, globally diversified revenues. No, I agree. The
yeah,
businesses that run the index are much better today. I'm not talking about the index. I don't think the market's in a bubble. I just think that there's many of these assets that a lot of people on here are trading that are in bubbles.
yes, that I would agree with that too. Yes, I would agree with that too. I think there's a lot of assets that are in bubbles, but it's going to get harder and harder to draw historical correlations the further and further entrenched we get in this new regime of markets where everything is democratized, everything is digital, everything is available to everyone. That's a different markets are just different than they were. Markets were much more elitist in the 90s. Like during the dot-com bubble burst, markets were much more elitist. Yeah, regular people lost money and regular people were trading stocks, but they were much more elitist in terms of a wealth concentration standpoint. They are much less elitist now. Yeah, still the top 10% of Americans own the majority of stocks, but the breadth of that control has expanded, right? Now households own 40% of equities. That's 40% of 65 trillion. That's a big number, right? So now speculators have more influence on valuation, right? This is another part of this. Speculators, technical guys, have more influence on the valuation of stocks now than they did in the 90s. Do you think there's more people looking at 9 and 21 EMAs today or in 1990? I think today by a magnitude. Do you think there's more chart readers today or 1990? Today by a magnitude. Do you think there's more kids trading today than there were in 1990? Today by a magnitude. How many 18-year-olds in America are trading today versus 1990? 1990, I bet you there was almost zero. Okay? Today there are millions. Do you think those kids, 18, 20, 25, are reading Ben Graham's Intelligent Investor? No. No. They're watching a YouTube video on how to read a chart, and then they're listening to their friends. What are the best stocks to buy to get exposure to their favorite industries? That's why the meme of people throwing Ben Graham's Intelligent Investor in the trash has come up in the last 5 years. That's why that meme has come up, because the makeup of the participant pool is changing. The participant pool is younger, more risk tolerant, longer time horizons,
I agree
more
with all
willing
this
to
stock talk,
speculate,
but
more willing to read charts, more
what's
willing to
your
take options leverage, more willing to take short-term options leverage. All these are behavioral changes in participants. So those things do matter. But yes, I agree with you. Valuations are extended. Yes, I agree the bubble will pop eventually. I don't think there's much alpha in saying that, but yes, I agree with that.
Yeah, I'm
I
not
don't think
saying
it's
there's
going to happen
alpha.
immediately.
I
I don't
just
think it's
don't.
going to happen tomorrow or next week.
Yeah, I just don't care to personally participate in a lot of these names that are going up like
I agree
15% a
with that.
day.
Yeah, I agree with that.
Because I mean,
I'm not
look,
buying any of those names.
here's the thing, right? Like, I think iron will probably go to $100. That's 50% upside from here, but it also probably has 50% downside from here. When the risk reward is 1 to 1, I'm just not interested in that. And also,
Yeah, that's fair.
me saying $100, right, is assuming that it's already saying we're gonna go from overvalued to probably actually bubbly to even more bubbly. It's just, you're an investor first, right? You're in stocks because you're an investor. Yeah, you're a trader too, and you want to trade things that go up for sure. But at the end of the day, like you want to be able to say, hey, I should expect X return from this investment at the end of the day. And I don't think you can say that about a lot of these bubbly stocks.
Yes, I think having a valuation floor is important, and that's part of why I opened where I opened, right? Which is that I spent most of the last month buying names that I think are more reasonably priced, and that I think will endure a pullback better, and that's by design too. So yeah, I am getting cautious up here more so than I was a few months ago, but I'm getting cautious not from a let's short the market standpoint, but I'm getting cautious from a let's rotate to um, names that have been neglected,
Yeah, I mean,
and
I wouldn't short the market. I definitely have zero short exposure at all. I don't. I even took off those hedges. I don't really care to touch S&P or any of those things. But I agree with you, rotating to value, which is why I'm still 100% invested. I have zero cash, but I'm just rotating into a different part of the market. I agree with you.
yep,
Small
yep.
caps
No
made a new
mistakes
all-time
about
high
that.
today, didn't they?
They did. Yeah,
Yeah,
they did.
and
Did a
it's
great
good
work there.
for rate cuts are going to be good for, and we basically got word that rate cuts are definitely coming. It's confirmed, and IWM new all time high, but also biotechs are going to go hand in hand with that. Regional is probably going to go well with that. So it's gonna be a lot of things, and yeah, me, I'm just in the bios, but I'm 100% invested. So I'm not bearish, but like I just wouldn't touch so many of these things. People are, dude. You post anything that's like, hey, we might have some chop here. You even suggest chop on your timeline right now. You suggest chop, even though the technicals show that it is choppy. You will get quote tweeted, and they'll be like, "This guy's a moron." The market goes up, and you're like, "All right." And I just saw a post today that was like, investing in your 401k with 100% employer match is an absolute scam. Let me write out the math here in Bitcoin. And it's just like, all right, dude. Like, it's like, kind of when you start seeing shit like that, you're like, bro.
Yeah. So, what do you guys think the rest of this like? How are you guys even going through this week? I mean, we're going day by day. Obviously, so let's start with this, Logical. You like to sometimes go over 100% in your portfolio, having a little bit there. Where are you at right now?
Yeah, so actually I'm at 100% this morning. I had 8% cash. I did a lot of cleanup in the last couple days. I've reduced my position down to 8 only, which is the lowest number I've ever had.
8
Um,
only.
yeah, I only
We
have
got
8.
and I'm in one of them randomly.
You're in
Okay,
one of them,
there
brother.
we go.
Yeah, so you know that you're probably in decent hands here. Um, so yeah, 8 positions. I had 8% cash this morning. I deployed it all. All I did was add to my existing holdings this morning, which turned out to be pretty good since basically the entire market bounced from the morning. I am not on margin, so I'm 100% long. I have no options exposure, so I have no leverage in my portfolio. I just own 8 stocks, all commons, and I like
It's
the
a great
names.
place to be right now. You probably feel very comfortable.
I sleep like a baby, brother.
Yeah, that's
It's
a good
good.
place to be. I'm
Yeah,
not in the same boat. I definitely have options exposure, but it's like everything in my portfolio is so deep in the money
dude, you
that
got the cushions to
yeah.
last, yeah, brother. You're basically at sit and sleep right now, bro. You're just
Like
resting
my
in the clouds.
UUU calls are up 3,600% as of the
Yeah,
close
like
today.
who
So
gives a
like
shit?
So
pull it
so
back,
my
you know.
my question would be is a lot of people say there's periods of the market where they're like, I'm not really opening up a whole lot of new stuff, but you have probably more positions than average right now. Is that thematic based stock talk or is that
Yeah,
just
there's a
your
lot of
style of
themes.
moving
Like
out?
I agree the market is frothy. I agree your crash will come. I agree all these crazy valuations will come down to earth. There's a lot of themes that I do not want to watch pass me by. The grid is going to be a major theme in the next 4 years. There's going to be so much money poured into the U.S. grid. It's going to blow people's minds. I have to be there for that. So PLPC and ENS, those are my ways to play it. I've talked about both those stocks, but you guys, if you want to look up my tweets on them, you can. PLPC, ENS, search from Stock Talk Weekly, read about it, do your own research. But I really like both those stocks. I think they'll be re-rated. PLPC is already up 20%, by the way, in 6 days since we
Hey,
mentioned it.
Stock Talk, by
Just
the
for
way, did you see
yeah.
this X feature you could do now? Like, I could go to your page and just search there's a search button now. So you could literally just tell
Oh,
people
dude,
to go to their
Logical.
Oh,
page.
really?
Yes.
Boomer alert! Boomer alert! That has been there for so long.
I
Well,
didn't even know
so,
that, dude. Well,
thank,
call me a boomer too. I didn't even
dude,
know
Guys,
I'm booming myself, brother.
you have not searched through. You can do that for other people too. Oh my god, it makes it so much better.
Yeah, so
But
you
yeah,
could,
the
yeah.
grid, U.S. semiconductors, and robotics are the three themes that I am not going to let watch pass me by. In the next 5 years, there will be a major robotic supply chain built. There will be a lot of money to be made in the building of that supply chain. I think there'll also be a United States semiconductor supply chain built, and there'll be a lot of money to be made on that. And I also think there'll be is just going to be unlimited. Like these are going to be money printers, but because they have been, but the easy money has been made on all of those trades. They're priced for years of success, most of the names. You have to know that because most of you think that just because the price goes up, it's going to keep going up in perpetuity. It's not how it works. Money rotates. Look at all-time charts. Look at pull up any stock that's been public for more than 30 years and look at the all-time chart. There's going to be some examples where it's parabolic, but there's going to be very few. There'll be a lot of examples where there were, 3 or 4 year periods stock did nothing or went down a lot or gave back all of its gains or fell into a base that it was stuck in for a decade before breaking out. It's a very, very nuanced game. So you have to know what you're doing. But yeah, I'm getting worried because seeing people talk about all these stocks that are up 500% year to date, saying buy, these are the good names to own, like Nebius and Centrus. Like Nebius was good to own at $23 when we were buying it and pounding the table. Centrus was good to own at 96. I haven't touched or will touch those names in terms of adding more at these prices. I own them.
Why not sell covered calls at this point?
No, that's not the right approach in a bull market either. But adding to the nosebleed names is not the right approach either. You lay seeds in those names when they're not nosebleed names. And if they keep growing for you, great. That's how you build a portfolio. You don't run around like, what's the hottest name? Let me buy it. You're gonna end up with no assets at the end of every cycle. I have assets. I'm here to accumulate assets, shares in companies over multiple cycles. Like Tesla and Amazon have served me over multiple cycles. This cycle, they haven't done shit for me. This cycle, they've gotten blown out of the water by my other positions. That's okay. I still own them way lower. I have an effective cost base on Tesla under $20. I'm never selling that. Whatever. Let it sit there. Tesla does something great in the future. Awesome. I'll benefit from that. Amazon, same thing. Super low effective cost basis. Whatever. Wants to consolidate for a few more years, go for it. There's other stuff that's performing for me in the meantime. That's how you build a
What about
portfolio.
the question of opportunity costs when it comes to stuff like that?
Yeah, but
'Cause I hear that a lot.
yeah, but look, what happens is that your portfolio grows, so the relative opportunity cost actually becomes diluted. Because look, Amazon used to be a huge portion of my portfolio, right? Now it's not. Now it's just like a flyer position, basically. I mean, what is the weighting at? I don't even remember what the weighting's at now. It's much lower. Used to be a 10+% position. I think now it's a sub 5% position. Amazon. So that's what happens. Is like your opportunity cost gets diluted by the growth in your portfolio. If your other stock picking does so well, like mine has in names like Kratos or Centrus or Nebius, superb. Because those names have become bigger weightings. Like Nebius, 5x for us this year. Nebius is now the second. Well, actually, Amcor might have passed it this week. Amcor and Nebius are battling for number 2, but Centrus is the biggest. Centrus started off as like a 6% weighting, and now it's like a 17% weighting. Am I adding more? No. Like, could it keep going? Sure, but that's a big move. And like Nebius started off as a 4 or 5% weighting. It's like a 13% weighting now. And keep in mind the portfolio is up 450% too, like the whole portfolio. So the size of these positions are much bigger.
So it's your conviction in those names that keeps you from rebalancing them?
It's
Is that the answer?
The short answer is that
Answer-ish.
kind of. But the short answer is that okay, so let's say LEU got cut in half from here. Okay. And it actually did earlier in our hold because LEU back in what was this? When was the drawdown from 260 to 160? So the drawdown from 260 to 160. Oh wow, now the chart's just gone so much further from there. Let me zoom out. The drawdown from 260 to 160 back in August. During that, Centrus was still my biggest position. But my portfolio didn't see that big of a drawdown during that period. Why? Because the other positions I had were performing so well. So even though my largest position went through this enormous drawdown, the other positions in my portfolio performed so well during that period. The portfolio was still net up from that period in early August to mid-August when the biggest position was down. But that's That's why I don't worry about these things, because my portfolio is smartly distributed. It's not distributed randomly. I don't own a bunch of random stocks like most people do, right? Most people have, oh, I have AMD, this, that, no semblance of organization. My portfolio is like, when I share my portfolio with our group, and Emp, you're in the community now, so you see the portfolio updates. I share the baskets, like the purpose of the positions, right? Like, hey, here's my nuclear and rare metals basket. Here's my robotics, AI, and automation basket. Here's my aerospace and defense basket. So when there are periods where my nuclear basket is weak, it is highly probable, assuming the market's holding up, that my semiconductor basket or my robotics basket or whatever will be outperforming the baseline market. And if that happens, then it allows for me to consolidate positions, because if I take a purely strict opportunity cost based approach, which is what you're alluding to, if I took a stricter opportunity cost approach, then I wouldn't be able to hold through multi-baggers, right? Because there is no such thing as a multi-bagger without consolidation, right? It doesn't exist. And so if during those periods of consolidation, I say, well, I'm going to move my money elsewhere because this potential multi-bagger position is consolidating, then I wouldn't get them in the first place. So that's kind of the multifaceted reason as to why I don't trim these positions sometimes. Now, LEU is getting a little big for my comfortability, but I have a price target in mind where I'm going to make the first trim. I'm not going to share that because people will hold my feet to the fire. But I have a price target in mind where I'm going to make the first trim, and we're not there yet. So
420, 100%.
not 420. No, it's not some random like arbitrary number. But I do have a projection in mind for where I think it could be rated to. But like, LEU is probably the only nuclear name where I think there is a valuation floor. Like out of all the nuclear names that have gone crazy, like the SMR names that have no revenue, like, is LEU trading at a wild valuation? Yeah, like, it's not trading at a cheap valuation, but there is a floor because American Centrifuge Plant is a unique asset. It does not have any peers, and so you could make the argument that a valuation should be assigned to American Centrifuge in its own. Now, is that valuation LEU's current market cap? Most reasonable people would say no, it's probably lower than that. But in the current market environment, that's the one I feel comfortable owning, the only one I feel comfortable owning, which is why I still own it. Now, the other nuclear names, don't feel comfortable owning those. And most names this year that have gone up a lot, I frankly don't feel comfortable owning. So that's why I'm pivoting. And people are like, "Oh, stock talk, what if the market keeps going up?" I'm not getting short the market. I'm just rotating to other longs. Those names are still going to go up, you know? They're not going to not go up with the market. And because I have leverage and concentration in them, I'll make money. You know, Inersis is up, a couple of percent, or since I bought it in the last 2 days, is up whatever 5 or 6% from where I bought it. But more dollars on that because of the size of the position than I would be on some meme stock that was up 40%. Because I put real money into these stocks when I researched them. That's the difference, you know? So I think more people have to think about stocks this way. You should be less short-term minded. You should be more focused on accumulating assets over multiple cycles. And if you do want to pay yourself, you can trim your high conviction positions. That's a form of paying yourself. You can sell a portion of a position. That, like, profit taking is not exogenous to this philosophy. I take profits all the time. I trimmed 15% of my UUU yesterday. It was up another 12% today. Like, I still had to trim it because it's up. My calls are up 3,000%. Like, you have to eventually just say, all right, enough's enough, and take some money off the table. And so I do that from time to time. But this is all a game of conviction, and that's really where what it all comes down to. It's all a game of conviction and not chasing the ball when it's been chased enough. Like, I don't want to say don't, but you shouldn't be buying the names that are up 500% year to date here and thinking they have another 500%. That's not the way to make money in markets. The names, to try to find the names that are going to be the next 500% names. That's how you make efficient money in the markets and don't get buried and don't panic on days like Friday. Like, I have 18 positions right now, okay? People in my Discord can attest to this. On Friday, absolutely zero of my positions were in the red as of the close. Didn't matter how much they were down. My cost-based advantages are so deep and my entries are so good on all those positions. They're even the stocks that were down 7 or 8% on Friday, still I was in the bright green on not only the equity but the options too on those stocks. That's the advantage of having conviction and entering early and being well timed and not chasing stuff at the top. Because when the degrossing does come, it will come in these names first that have 5x and 10x. That's where it'll come first. So, yeah, just be careful because I hear a lot of this lately. People are like, you know what? Fuck it. I missed this move. I'm just going to buy this stock. That's up 500%. Like, be careful. Be careful. Like, please. Because I saw people lose their asses in 22, and I do not want people to do that again. If you're one of those people that did, please don't do that again and get back all your money. Because you know who you are. People out there that did that.
Just at Evan next time, okay?
Bro, I know a lot of smart people that did it too. That's the sad part. I know people with like a decade of industry experience that gave back all their gains in 22. So there's nothing to be shy about if you did. I gave back a lot of money too, not all of it. We're thankfully short RK, but the thing is that even experienced people will make mistakes. I blew like my start of my career. I blew up a huge account. It was a meaningful amount of money to me. So you'll make the mistakes. I'm not saying don't make mistakes or you're an idiot for making mistakes. That's not the point. The point is that like don't do it again if you did it already in your career. That's the important part, is to learn from the mistakes. Making them is not the important part. Learning from them is. But a lot of you won't. You'll give it all back this cycle too, because you'll hang on to the nosebleed names till the very end. So
Yeah. Yeah, some people bet on the Jets to win the Super Bowl. I mean, they just never learn.
the Cowboys. Yeah.
Well, touche.
To my thing, I did bet last year on the Jets to win the Super Bowl because the hype was there. This year I did not. Last year I did. And 2 years ago, I really thought it was gonna happen. Running out with that flag, best moment of my life. Ended quick.
Stock Talk, if you saw a stock up 600% year to date, go sideways for a while, it's down 60% from the highs, under the 21, EMA on the daily. Looks like it's going to break the 9 on the weekly. Would you just kind of cut that out of your portfolio pretty quickly, or?
In this environment,
Yeah, I'm
yeah.
just saying. I mean, if it's already up, it's up 600% year to date. It's already pulled back 60% from the highs. It's lost the EMAs on the daily, flirting with it on the weekly. I don't know. I'm just asking. It's BMNR is what I'm just looking at
Oh,
I'm sorry, I was waiting for you to get get that one down. I was
yeah,
checking how much
I
is
would sell a
BMNR.
name that was doing that. Yeah.
there.
Not just because.
To be fair, it's not a bad, like, the technical side of it's actually not bad. Just
It's
to be
not that
fair,
bad. I
Evan,
know. We're just
I,
trolling.
I just like to troll him here at the end.
Yeah, but yeah, just know what you own. I don't know what is going to happen or when it's going to happen, but something will happen. And when it happens, you'll want to own good stuff and not shitty companies that you can't understand the valuation. And I know, like, I'm not calling any of you out, but let's be real. Come on, most of you in the audience, if I gave you 10 minutes to explain the valuation behind most of your stocks, could you do it? If you got closed in a room with Stock Talk and I interrogated you on the valuation of your stock, could you defend it? Come on, be honest with yourselves. I know most of you couldn't. I know
Number
most of you
go
couldn't.
up.
And
For anyone who hasn't met Stock Talk as well, if you didn't know, he's like 6'2", and he likes to get in your face.
I'm not.
Give him a drink or two. He
I
is
am.
getting
I am
nice.
almost 6'4", so 6'2" is
All
that is
right.
cutting me.
Transparently, I didn't
Cutting me
actually
short.
mean to disrespect you on that one. I just was throwing a number out there, but fair enough. But he will get close and just have a good conversation in your face. Actually, a quick story. We were at dinner, and Stock Talk was on one side, and everyone else was on the other side, and the whole table heard the conversation. But it was a good one. We were learning some value on it, but it was into it. It was
I'm
a
a
good one.
loud guy, dude. There's no mistake about it. But yeah,
So no, you guys would all fold. That's what I'd be like, guys. I'm sorry. I invest in ETFs, Q top. That's what it
but
is.
it's not even about like
Where I
would
would
you
fold
fold
too.
from pressure. It's like would you be able to answer my questions? Like if somebody knowledgeable, like, Ask yourself this. Scroll through your whole portfolio and ask yourself, if somebody knowledgeable sat down with me and interrogated me about the stock, could I defend the valuation? Not the stock, not the company, not the product. This is what you guys mistake. Okay? A lot of you think when I say, hey, defend the stock, you're like, well, dude, have you seen their car? It's a sick car. That's not defending the valuation, okay? Neither is it defending the valuation when you say, well, dude, they're in a lot of sexy industries, man. Like, don't you believe in all these industries? Nope. That's not a defense of the valuation. Can you defend the money that they are making or might make in the near term future? That's it. That's what defending the valuation is. And most of you have no semblance. I would destroy you in 2 questions. You would be lost. And that's not an insult to any of you. That's, to me, highlighting the lack of preparation that most of you have behind the things that you own. It goes back to what I said a few weeks ago about more of you do more work to buy a new TV. Admit and grapple with the reality that some of you don't know what you own. You think you know what you own. Look, there's a mistake that I buy stock A. Stock A goes up. Therefore, I knew what I was doing. Right? A lot of you think that. Well, I don't care. I don't really understand the company, but I bought it and it went up. So, like, obviously my thesis was right. Like, I made money. Like, duh, who cares? Like, screw the boomers. I made money. Okay, you made a good trade. But if you're planning on holding it, keeping it, right? As in, oh, I didn't just sell it for a profit. I'm going to keep this stock now that went up. Now you have to understand it because it's not always going to be green. And when it's red, you're going to say, oh, well, now it's going down. Why is it going down? How much lower can it go? When you start asking those types of questions, then you wish you knew it, right? Then you wish you could have defended the valuation. Then you wish you could have said, well, dude, I don't know. Hey, maybe it could go down to a 2 billion valuation. What is this thing really worth? I never asked myself that question. And then you end up selling it at the lows, you know, or holding it before another 50% drawdown or whatever, because you don't know it. So knowing the stocks does matter. It doesn't matter when in a parabolic market when everything's going up, but it does matter on the way down a lot. And it matters during the corrections in between too. That's when it counts. No one needs to know what they own when it's going up. You know, everybody can be Mark Minervini when the stocks are going up and to the right. You can be like, oh, I don't even know what they do, but the chart looks good. That's great. All the charts look good in a bull market, dude. Most charts look good in a bull market. Like, that's just the truth. That's why it's a bull market. So it's like, great. What happens when they don't look good? Then what are you going to lean on? You can't lean on the chart anymore. You know what happens in a 30% drawdown in the indexes? Every chart breaks. All of them. So then what? You sell everything? Of course not. You shouldn't. But some of you will.
The liquidate
Yeah,
all button.
Some of you will though, because you'll say, well, the charts are all broken. Right? Well, I don't know, dude, but I got into this for the setup, bro. The setup was nice. The setup's not nice anymore. You know, that's what happens because you don't know the stock. You don't actually know the company. You don't actually know the tailwinds. You don't actually have a real thesis. You're not like, wow, you know what? This company's going to benefit from the next 6 years of grid investment. Why the fuck would I sell it on a 9 EMA forfeit? What the hell does that have to do with anything? All right? That's the difference. That is the difference between conviction and making money. Making money, which is the fucking point. That's the difference between this whole gambling parade that all of Twitter is. And that's why I rail against this stuff every day. That's why I tweet about this, mocking this sort of setup chasing and momentum chasing every day, because that's what it is. It's mock worthy. It's not how you make money. If you want to spend a couple months playing that game, dancing around like a chicken, great. You want to make money over 7 or 8 or 9 or 10 years or 20 years in the market where you make money every year and your portfolio grows every year, that changes your life. That will change your life. My life has changed. Dude, my life changed in the last 5 years alone, let alone in the 5 years before that. The first 5 years I was trading and investing, that changed my life. And the last 5 years changed it again by a magnitude. By a magnitude. And that's what outperforming year after year after year can do, because your portfolio compounds. My portfolio was up 260% last year. My portfolio was up 450% this year. That's a cumulative return of nearly 1,000% in less than 2 years on my entire net worth. Like, that's life changing. And it's not done through meme stocks. How often do you guys see me tweeting about Opendoor or any of these, like, I don't want to call it a meme stock because some people are going to get insulted by that, or whatever, or any of these stocks that everyone talks about? When do you guys see those on my feed? Well, now people say, well, Stock Talk, what about Nebius? No. Go back to May when I was talking about Nebius. How many people were talking about it then? Not many. Or go back to May when I was talking about Centrus. Not now. Yeah, now they're popular. But when I start talking about stocks, go through the names I talked about in the last 2 weeks. Scroll through my feed. PLPC, Amcor, PLab, ENS. Who talks about these stocks? No one. Right? So that's the difference. Is you doing real work versus just running around. Who's talking about what? What's the new ticker on Twitter today that all 7 big accounts are tweeting about? Have fun if that's what you want to do, but you're not going to get better as an investor. You're not going to get better as a stock picker. You're not going to be able to stand up on your own 2 feet. You're going to have this cane for your entire investing and trading career where you're desperately going to be wondering, what's the next hot stock that everyone's going to be talking about? Because that's the one I have to be in, because I never learned to think for myself in all those years that I was doing that. Right? You don't want to be that person. I could delete Twitter today and it wouldn't affect my process. I could delete it. I mean, I have a business on Twitter, so I wouldn't. But in theory, if somebody was like, hey, Stock Talk, would you be able to perform the way you do without Twitter? I could delete Twitter and it wouldn't affect anything about my research process. I don't scroll my feed looking for new ideas. I think about what's happening in the world and then I apply it to investing. That's it. And that's all any of you need to do too. And most of you are smart enough, if you have a job and have made it this far in your lives, are smart enough to do that. It's not
Is that a beer or Diet Coke?
PhD level. Yeah, it is. It's Coke Zero. It's not a PhD level skill. And neither is chart reading either. None of this is PhD level stuff. Like, don't let anyone convince you that any of this is hard. None of it is. It's all simple. It's all psychology and basic fundamentals and
Like
basic
people make
technicals.
it hard.
Yeah, they make it hard. Like when you're looking at the fundamentals for business, do you need to build a financial model? No. Go look at the TTM revenue, go look at the TTM EPS, go pull up a 10-year chart of revenue and EPS and ask yourself if the company growing meaningfully. Then go look at the debt. Ask yourself if the debt is serviceable. If you don't know how to analyze that, ask an LLM if the debt is serviceable. Ask them how serviceable it is. Ask them to grade the debt. Ask them if there's debt grades already publicly available. These are such easy things to do. In 10 minutes, you can get a picture of, is the company growing? Are they profitable? Is the valuation reasonable? Is the debt serviceable? Boom, you've knocked out the fundamentals. Now go look at the chart. Pull up your volume moving averages. Is the volume profile relatively accumulative? Cool, check. Is the stock above all this moving averages? Cool, check. Is it tight against the moving averages, providing me an ideal entry? Cool, check. All right, technicals out of the way. Now let's check for catalysts. Any news reports lately that are relevant? Cool. Maybe there are a couple. Any analyst reports? Oh, nice. An upgrade came out a week ago. Cool. Check. Now, any short interest? Nice. Stock has 50% short interest. We could force some covering. Cool. Check. Like, takes you 20 minutes. Boom. And you've checked 20 boxes about a stock and you're like, wow, this thing probably goes up. Like, it's lack of effort for most of you. That's all it is. And that's why you feel the need to, like, run around, from stock to stock. You don't need to do that to make it in the markets. You can own a basket of 10 stocks every year and super perform the markets. Just 10. Maybe even less. But it'd be a little bit riskier, but maybe even less. But really 10. 10 across 3 themes, you'll outperform the market every year if they're well picked.
Well, I was going to ask you about your robotic stuff, but we're actually going to chat robotics tomorrow on the back end of the space. So we're going to save that one.
Perfect. We'll save it.
Good timing, huh?
I can't share all tickets anyway, but I will share the one I already own anyway that I've talked about, GXO. So we'll talk about some others. Maybe tomorrow. By tomorrow, I will have opened it. Who knows? All right.
Also, I want to hear your thoughts on Chinese robotics and stuff like that and what's going on in that world, but we'll cover it.
Okay, sounds good.
You know.
New goal for tomorrow. Evan's gonna convince Stock Talk to buy China. All right.
I'm gonna convince Stock Talk to buy BM&R. Make sure you're following all of the speakers up here. Stock Talk, I appreciate you. Everyone else, make sure you're following everyone. If you enjoy this type of live free content, make sure you're following the host. Yeah, shout out to George Prospero for hanging out with us. Appreciate you, Emp and Wolf and Stock Talk, and yeah, have a great one.